Hey everybody, it's Pete Carmasino here. Hey, what a great day we're having here in the markets this week. Again, we're a few days away here from Christmas. We got a shortened trading day tomorrow. As I said, this week is going to be topsy-turvy, but we're going to see some things happening that, we typically don't see. A little bit less volume, potentially a little bit less resistance to the upside. Today it really flowed. After the open, the market just basically had a few things to deal with and a few bumps along the way, but when you start to see some economic news like that we're seeing lately, things are really going to be gassed up a little bit. So looking strong here into the holiday week. Loving this. This is fantastic. And I've got a few names here to look at and a few industries to consider, but some actually individual stock names. I haven't done this yet. And, we're going to start getting into that now as well. Now, remember, none of this is financial advice. I'm not an advisor. I'm not your advisor. I'm just calling out names that are changing trend that look interesting to me in specific industries. And one of the reasons I'm looking at equipment names, and in this video, I'll be talking about medical equipment, is because of the Trump tax laws that were just passed this in July, the one big beautiful bill, whatever you want to call it. The administration put forth the 100% bonus depreciation rule. And that's basically allowing individual companies, businesses, even small businesses up to massive enterprises to purchase equipment and then deducted 100% off of their revenue, off the top of their revenue for the entire year. Now, I'm not a tax advisor either, and this is just the tax news. Now, medical equipment has a little bit longer of a sales cycle, but people are starting to realize that most likely this is going to be one of the sectors that do very well. As a matter of fact, if you look at the Dow 30, Caterpillar is the number one performing stock in the Dow 30 year to date. Now, I don't know what it finished at today. We can look at it. But prior to today's, after yesterday's close and prior to today's open, it was up about 60% this year. That's Caterpillar. Okay. It's not Google or Amazon or any of the Mag 7. This is a machinery name, partially because of this potential new rule. Don't forget, you also have the steel companies, XME, we talked about in my first video. That particular metals and mining ETF has been doing extremely well. Some of the stocks in there have been, on fire this year. So this is really a continuation of what I've been talking about now for many months about what's happening here in the tax incentives that are driving this capital expenditure boom, so to speak. And a lot of people are worried about AI. I get that. Me too. Who's not worried about it? We want to make sure this works. We want to see these companies be successful. But the amount of money they're throwing at it, it's hard to kind of figure out when this is going to monetize. But when you start to look at the medical facilities out here, the healthcare equipment ETF, which I'm going to pull up first, you look at that, you can start to see there's a change in trend. People are starting to now realize that this is the next game potentially as far as the industry goes. Look, healthcare in general is kind of a defensive feeling type sector. It's typically one of the three defensive names like utilities, consumer staples, and healthcare. But if you go a little bit deeper, one subsector down from the main sector of healthcare, you get the equipment. That medical and healthcare equipment ETF is looking strong right now. Now, I want to point you to my X.com page as well. From time to time, I put out names out there that I've seen that are changing trend. I put out two names this year that are more than doubled, and I did this early in the year. So I'm just going to show you those so you can know where to find me on X.com. And then I'm going to go back to the charts. We're going to talk about some industries and some individual names right now. All right, folks, this is my X.com, formerly Twitter handle, so to speak. It's just pretty simple, at Pete Carmasino. So you can follow me here as well. I just put out things from time to time about what's going on. I put this out today. I thought this was interesting because what do you have here? In the NASDAQ 100, the top three stocks were storage names. And here's your Mag 7, not underperforming by any means. I mean, you got Google up 60%, Amazon up nicely, NVIDIA up, of course, close to 40 or 50%, maybe just like 30% or so. But my point of showing you this is that I'm putting out information here in multiple areas. And a couple of the names that I talked about, I'm just scrolling through here to kind of show you some of the names I was talking about. One of them was this particular company called Viasat. Now, this stock was trading at around $11 a share. Things are starting to change. The reason I looked at this name is because I used this service, recently had used it back in this time frame. It was incredible on the airplane. It was perfect internet. Everything was great. And I thought to myself, wow, this stock might be, the next opportunity. Well, we're going to look at what it did. There was another one here. I put a few names out here like Southwest, Paycom, and this other one. No one has really even heard of this name. It was National Vision Holdings. I mean, I've used them before along the way. I wear contacts and eyeglasses as well. But here was a name that was trading at around $12. So, like I said, follow me on X. I'll throw names out from time to time. Let me just show you what those two names did, and then we'll get into the names that I'm talking about here in the medical equipment sector. So you can see, I talked about, Viasat, VSAT, somewhere around this time frame, this March. It moved higher, it moved lower. Then we'll forget we had Liberation Day, had the really topsy-turvy market there. But it did hold support around that $7 to $7.50 level. And once it started to actually change trend, it really took off. I mean, this stock went from, as I said, somewhere around $10, and I talked about, to 35. That's a triple. And so when you start to see names starting to change trend, there are great names to either add to your watch list, or just pay attention to. This was almost an identical setup. Sometime in March, was more toward the end of March. Same thing. We got the sell-off. Liberation Day came. Tariffs basically upset the apple cart in the markets. And then boom, this took off. I think this was around $10 or $11 or so. That went to $30. So these are names that I'm seeing. I have my own methodology to find these names, and I'm going to show you a few names right now. And one of them is this ETF, which is the healthcare equipment ETF, symbol XHE. It's the Spider S&P healthcare equipment name, or index, basically ETF. And it's a subsector, right, of the healthcare sector. Now, look, you can see this massive downtrend, a lot of consolidation, a lot of back and forth movement, even after we saw the market sell off in April. It recovered, but really hasn't moved until recently. And that's really in the last month. And what's happening? I just believe that I feel like the trend is going to be picking up in these equipment names. One of the names that looks very similar to these other stocks that I was looking at in March is a company called ICU Medical, ICUI. Very nice trend change here. Moved higher. It's consolidating a little bit, but again, it's a medical supply and healthcare equipment name, like this particular one I'm looking at right now. Another one was that just popped up on my radar today. I don't even know how to say it. It's Glaukos, I guess. I'm not sure, or Glaukos. Very similar looking chart. Again, in the medical equipment area, starting to change trend. These are larger cap names. Hopefully they're firm as far as earnings and things of that nature. But anything can happen in the market, so you have to be careful. So make sure you're using proper risk management strategies as well, as far as not just blindly buying names you see on a chart. Some names we talked about, insurance. AIG is one of the names that's recently changed trend. Look at the powerful move on AIG. Another one is Aflac, symbol AFL. Again, changing trend. I'll squeeze this chart. It's not like this hasn't been performing, right? It basically just consolidated in the last year. Now, if it can move above, I would think this 113 level, it's happened a few times. It really got to 115 and turned around. So I don't really count that. I think that's weak resistance. I think stronger resistance is around this 113. If it busts above there, this could be an interesting name, not only for a quick trade, but maybe for the rest of the year. Another one that looked like it was changing trend as well is Becton Dickinson, symbol BDX. Very similar name, again, medical supply in the healthcare area. A lot of movement, little volatile name. Not sure exactly about this one. But I said I would look at another industry. I want to look at transports through the IYT. That's going to be an ETF. That's the iShares Transportation Average. Now, this has been steadily moving higher. I see a head and shoulders here, but it's going to be hard to draw it because there's multiple shoulders. You can see a shoulder there. Here's a large drawdown. That's where the head is formed. It's really an inverse head and shoulders. And this neckline, somewhere around the 70 to 75 level, which has been a consolidation range, really just moved out of this range. I would think that support around 75 looks interesting to me. This is, again, the entire index. If I scroll out, it's not like it's not been performing even since 2023. It's been moving higher, but you do have a lot of different headwinds in this. Interest rates, commodity prices, oil prices, things of that nature are going to affect this. But one name inside of this particular sort of industry and subsector of transportation is UPS. Again, this is a trend change for sure. Again, not looking at anything fundamentally here, just technically speaking, this looks like an interesting opportunity as well. Now, a couple other names in just different industries. One is more cyclical, Airbnb. I've used the service. I'm sure most of you listening have used it. It's a pretty cool and amazing thing to use, even if you're traveling domestically or internationally. It's just been a wild ride for this name. It's been mostly in a downtrend, but choppy and volatile. However, it just recently move above some long-term moving averages and are starting to see these crossovers. It's just not clean, but I thought I'd point it out because it is an interesting and well-known name. And the last name I'll look at is a company called NASDAQ, the OMX group, um, symbol NDAQ. I really like this chart. It's really interesting to me. Certainly, the service and what they provide out there to the marketplace is outstanding, and it has been for many years. And yet, a consolidation and moving higher here above the recent highs. I like that. To me, that shows strength. Just an interesting name to add to your watch list. All right, like I said, I just wanted to go over a few industries today. We're having a nice week here heading into the Christmas holidays. Again, I believe it's going to be a little bit lighter volume, maybe hopefully less volatility too, especially to the downside. But we do have a shortened trading day tomorrow. So let's see how things play out. I'll be back here tomorrow with another sort of review and market analysis, sort of looking at not only how we look at the ratio, the Qs over the XLP, and a lot of other different ratios when you look at individual sectors, but also now diving in a little bit deeper, sort of opening up the hood underneath these ETFs and see what stocks are doing well inside of there. And again, one industry that I think is going to potentially have a tailwind is this medical equipment and medical supplies subsector, so to speak, of the S&P. All right, until tomorrow, take care.